No, but we have sold shares, and I would say that at the end of the year, I would think it extremely likely that Apple is the largest common stock holding we have. Now, one interesting thing is that Charlie and I looked at common stocks or marketable equities or the things that people love to look at as being businesses. And so when we own a Dairy Queen or we own whatever it may be, we look at that as a business. And when we own Coca-Cola or American Express or Apple, we look at that as a business. Now, we can buy really wonderful companies in the market as businesses. We can't buy all of them. All of their shares. We can't buy 90% or 80% or anything like that. But when we look at Coca-Cola and American Express and Apple, we look at them as businesses. Now, there's differences in tax factors. There's difference in managerial responsibility, a whole bunch of things. But in terms of deploying your money, we always look at every stock as a business, and we have no attempt made to predict markets. We have no attempt made to pick stocks. I went through many, many years doing the wrong thing. I got interested in stocks very early, and I was fascinated by them. And I wasn't wasting my time because I was reading every book possible and everything else. But finally, I picked up a copy of The Intelligent Investor in Lincoln, and there was a few sentences in there that said much more eloquently than I can say it. But if you look at stocks as a business and treat the market as something that doesn't tell you, isn't there to instruct you, but it's there to serve you, you'll do a lot better over time than if you try to take charts and listen to people talk about moving averages and look at the Fed pronouncements and all of that sort of thing. And so that made a lot of sense to me then. And the way I've been allowed to deploy it, Charlie and I talked about this, of course, constantly. It's changed over the years as the amount of capital we have has changed and all of that. But the basic principle was laid out by Ben Graham in that book, which I picked up for a couple of dollars, and which basically said to me, you've been wasting your time now, but maybe you can use what you've learned or been reading about and put it to better use. And then Charlie came along and told me how to put it to even better use. And that's sort of the story of why we own American Express, which is a wonderful business. We own Coca-Cola, which is a wonderful business. And we own Apple, which is an even better business. And we will own, unless something really extraordinary happens, we will own Apple and American Express and Coca-Cola when Greg takes over this place. And it's such a simple approach that it's almost deceptive. Most things, if you keep working harder and harder at it, you learn a little more math or you learn a little more physics. But investments, you don't really have to do that. You really have to have your mind set properly. So we will end up, unless something dramatically happens that really changes capital allocation, a strategy. We will have Apple as our largest investment, but I don't mind at all, under current conditions, building the cash position. I think when I look at the alternative of what's available in the equity markets and I look at the composition of what's going on in the world, we find it quite attractive. And one thing that may surprise you, but almost everybody I know pays a lot more attention to not paying taxes than I think they should. We don't mind paying taxes at Berkshire, and we are paying a 21% federal rate on the gains we're taking in Apple, and that rate was 35% not that long ago, and it's been 52% in the past when I've been operating. And the federal government owns a part of the earnings of the business we make. They don't own the assets, but they own a percentage of the earnings. And they can change that percentage any year. And the percentage that they've decreed currently is 21%. And I would say with the present fiscal policies, I think that something has to give. And I think that higher taxes are quite likely. And the government wants to take a greater share of your income or mine or Berkshire's, they can do it. And they may decide that someday they don't want the fiscal deficit to be this large because that has some important consequences, and they may not want to decrease spending a lot, and they may decide they'll take a larger percentage of what we earn, and we'll pay it. And we always hope at Berkshire to pay substantial federal income taxes. We think it's appropriate that a country that's has been as generous to our owners. It's been the place. I was lucky. Berkshire was lucky it was here. And if we send in a check like we did last year, we sent in over $5 billion to the U.S. federal government. And if 800 other companies had done the same thing, no other person in the United States would have had to pay a dime of federal taxes, whether income taxes. No Social Security taxes, no estate taxes, no. It's open down the line. Now, I would like to. I hope things develop well enough with Berkshire that we say we're in the 800 club and maybe even move up a few notches. It doesn't bother me in the least to write that check, and I would really hope with all that America's done for all of you, it shouldn't bother you that we do it. And if I'm doing it at 21% this year and we're doing it at a higher percentage later on, I don't think you'll actually mind the fact that we sold a little Apple this year. Okay, let's go to section 1.
Hi, Mr. Buffett. This is Matthew Lai from China, Hong Kong. I'm running my listed company called FW, and we are so grateful to learn from you, and you really inspire us. My question is, besides the electrical car company, BYD, under what circumstances you will reinvest and reconsider to invest Hong Kong and China company? Thank you.
Yeah. Well, our primary investments will always be in the United States. We do think it. Now, the companies we invest in the United States, American Express does business around the world, and no company hardly does business around the world like Coca-Cola. I mean, they are the preferred soft drink, something maybe like 170 or 180 out of 200 countries. Those are rough approximations from a few years back, probably, but that degree of acceptance worldwide is, I think it's almost unmatched. I can't really think of any company that has it. American Express has a position in the credit card field, which I think is extremely strong. And part of that was part of the reasons for that is one of the directors that I introduced a few minutes ago, Ken Chenault. But it has strengthened dramatically over the last 20 years for a lot of reasons. So we will, the BYD investment was we made the commitment in Japan, which I did 5 years ago, and that was just overwhelmingly, it was compelling. It was just extraordinarily compelling, and we bought it as fast as we could, and we spent a year, and we got a few percent of our assets in 5 very big companies, but that's the problem of being our size. But you won't find us making a lot of investments outside the United States, although we're participating through these other companies in the world economy. But I understand the United States rules, weaknesses, strengths, whatever it may be. I don't have the same feeling for economies generally around the world. I don't pick up on other cultures extremely well, and the lucky thing is I don't have to, because I don't live in some tiny little country that has just doesn't have a big economy. But I'm in an economy already that has, after starting out with 0.5% of the world's population, has ended up with well over 20% of the world's output in an amazingly short period of time. So we will be American oriented. If we do something really big, it's extremely likely to be in the United States. Charlie, in all those years, there's only 2 times he's told me that, this one is really, he would always go along with me and say, well, when I was suggesting something, he'd say, well, this is really not that great, but it's probably the best you'll come up with, so I'll go along with the idea. But Charlie twice has pounded the table with me and just said, buy. And BYD was one of them, and Costco was the other. And we bought a certain amount of Costco, and we bought quite a bit of BYD. But looking back, he already was aggressive, but I should have been more aggressive in Costco. It wasn't fatal that we weren't, but he was right big time in both companies. And I'm aware of what goes on in most markets, but I think it's unlikely that we make any large commitments in almost any country you can name, although we don't rule it out entirely. And I feel extremely good about our Japanese position, and we'll have that. I don't know how many years. Greg will be sitting with that at some point, and we couldn't be happier with that. But we really have a different outlook in looking at well, we look at your money, which we couldn't bear to lose, and we feel that we're very less likely to make any truly major mistakes in the United States than in many other countries. Okay, Becky.
This next question comes from Stanley Holmes, who is a Berkshire shareholder from Salt Lake City. He asks, in his 2024 annual letter to shareholders, Chairman Buffett noted the severe earnings disappointment experienced at Berkshire Hathaway Energy last year and expressed concern about earnings and asset values in the utility industry. Recognizing that investors are worried about climate change-related expenses and that new uncertainties cloud the regulatory environment, the chairman suggested that some jurisdictions may adopt the public power model. There are now signs that policymakers in Utah, citing state sovereignty, may already be poised to move in that direction. The Utah legislature recently mandated the state's right to serve as sole purchaser of energy from an in-state power plant and, under some circumstances, purchase the power plant before it can be retired. The state utility regulator will be legally bound to prioritize public purchases of power and facilities that could include assets owned by Berkshire Hathaway Energy's Pacific Core utility, Rocky Mountain Power. Will Berkshire, through BHE, continue to invest resources in jurisdictions where corporate assets may be subject to confiscatory state policies and actions? And how is Berkshire Energy working with officials in Utah to minimize potential corporate losses if and when state control is asserted over its electrical utility sector?
Yeah. I will let Greg join with me in the answer on this, but I would say our feeling is that Utah is actually very likely to treat us fairly, whether the action is in granting appropriate rates that give us the return we generally expected in terms of our own properties, or if they decide for some reason to go to public power, I think they would compensate us fairly. In the 1930s, George Norris, a senator from Nebraska, just turned Nebraska into a public power state, and our experience in Iowa would indicate that free enterprise has its role, and that we can run a privately owned utility company that will be more efficient for society than, at least in most states, people can do with public power. But what has happened is that there's going to be enormous amounts of money spent on power. And if you're going to do it with private owners, there's nobody better situated than Berkshire to satisfy the portion, but a large portion of the needs of the country, and we will do it at a rate of return that is not, it's not designed to make us rich or anything like that. It's a sensible rate of return, but we won't do it if we think we're not going to get any return. It'd be kind of crazy. And we've seen actions in a few states where some of the costs associated with climate change are not being regarded as costs that the utility shouldn't incur. Well, believe me, if it was publicly owned, they would have incurred it too. But we'll do what society tells us, and we have got the money, and we've got the knowledge to participate big in something that is enormously important for the country. But we're not going to throw good money after bad in the field. I don't worry about. My understanding is, and Greg can elaborate on this now immediately, but I don't regard Utah as being unfriendly to the idea of utilities being treated fairly. Charlie? Charlie, I'm so used to I had actually checked myself a couple times already, but I'll slip again.
That's a great honor, Warren. Yeah, Warren, you touched on it initially in your letter relative to the challenges in the industry, and then you've just alluded to the significant investment that has to go into the energy industry, the utility sector for many years to come. And I think if we start there, if I think of our different utilities, and we'll definitely come to Utah and Pacific Corp, but if you look at the underlying demand that is building in each of those utilities and the amount of dollars that are going to have to go in to meet that demand, it's absolutely incredible. So when you raised it in your letter, it's a really important issue. We have to have a regulatory compact that works between, if it's a public utility, it has to work in concert with the state, Utah being an example, or it ultimately becomes potentially a public power entity. So just to set the frame a little bit, if I think of Iowa, which you mentioned, and the underlying, we've made substantial investments there. It's been very consistent with both the public policy that the state and legislature wanted, and they enacted very specific laws to encourage that. But that utility is more than 100 years old right now. And if we look at the demand that's in place for Mid-American Iowa utility over the next, say, into the mid-2030s, associated with AI and the data centers, that demand doubles in that short period of time. And that happened, and it took 100 years plus to get where we are today. And now it's going to double. And that will require substantial amounts of capital from Mid-American and its shareholders. And how that will function is if we have a proper regulatory compact in place, which you've highlighted. If we then go to, say, Nevada, where we own 2 utilities there and cover the lion's share in Nevada, if you go over a similar time frame and you look at the underlying demand in that utility and, say, go into the later 2030s, it triples the underlying demand, and billions of dollars have to be put in. Our rate base will literally go from, it's not a modest level now, but you're talking probably an incremental 6 to 10 billion at least of rate base going into that type of entity, which requires, again, alignment with the state and their policies and a proper recovery of our underlying both capital and a return on capital. So when we come to the wildfires, that's been a substantial challenge because it's the first time there's been a lot of discussion around one of our utilities, experienced significant losses associated with the wildfires. What portion of those costs will be recovered? And that's really the dialogue we're in, and does that properly work? When I think of the wildfires, there's been many claims, and a recent additional claim last week for $30 billion, and we don't take that lightly, but it is an incremental claim to an already existing lawsuit that's in place. And when I think of Pacific Corp, we're in a place where, first and foremost, all the litigation will be challenged because the basis for it, at least we believe there's places where it's unfounded, and we'll continue to challenge it. And it will take many years to be resolved, as Warren highlighted in the letter. But if you think of Pacific Corp and the litigation there, number one, how we think and operate those assets have to change. because we've had we have worked with the states, across all our states for many years, with the fundamental goal to be to keep the power on. And our teams and our employees worked incredibly hard to keep the power on day in, day out, through storms, unfortunately through the 2020 fires. The instincts were not to turn off the power. The instinct was to keep the power on, to keep hospitals, fire stations responding. It's not in their mind to, or at least culturally, it wasn't in our minds to de-energize. So the first thing we had to do was step back and say, we've got to fundamentally change the culture, not just at Pacific Corp, but across all our utilities. The first thing we have to recognize is that there's now going to be situations where we prioritize de-energizing the assets. And that's completely different than how we've operated those assets, as I've highlighted, for 100+ years. So we start with the culture. We had to change that. The second thing is we've now changed our operating systems so that we can turn off the power very quickly. If there's a fire that's encroaching, we will turn off our systems now. And we'll go the minute the conditions are safe again, we'll re-energize it. But we've had to do that. And then the third thing is continuing to invest in a way that allows us to try to minimize the risk of the fire. But when you get back to Utah and Pacific Corp, the challenge we do have is within Pacific Corp, as we go through both litigation and through continuing to operate that entity, it generates a certain amount of capital and profits that will remain in that entity and be reinvested back into that business. But fundamentally, as we go forward, we need both legislative and regulatory reform across the Pacific Corp states if we're going to deploy incremental capital, make incremental contributions into that business. As Warren said, we don't want to throw good capital after bad capital. So we'll be very disciplined there. But the reality is there are opportunities to both solve the legislative and regulatory solutions. And the best example we actually have, and I think it's the gold standard across the country, is Utah. So as Warren touched on, it's a state we're happy we're investing in. It is part of Pacific Corp, so there's a certain amount of balance there as to how we do it. But in the last legislative session that existed, Utah actually passed a bill that does a couple very important things. One, it caps non-economic damages on wildfire claims. So if you go back to the wildfires we have in Oregon, and the claims you're hearing filed for, there's economic damages associated with them, and those harms should receive the economic damages associated with that. But unfortunately, and even though there's legislature and case law in Oregon that says wildfire non-economic damages should not be awarded, there's very substantial non-economic damages being awarded there. Utah took a very proactive position to say, we will cap those non-economic damages. And it creates an environment, again, it's back to that, is there an environment where you want to invest in? Yes. And then incrementally, they've created a very substantial fund. It's literally called the Wildfire Fund for fires in Utah that will help facilitate both liquidity and the ability to resolve the situation. So Utah, we believe, including the legislation that a lot of other things came out of it, is the actual gold standard as we go forward. So very important issue for Berkshire Hathaway Energy. But at the same time, it is a Pacific Corp issue. The risk of regulatory compacts not being respected is a much broader one that we'll always evaluate and be careful how we deploy our capital. But both Pacific Corp will manage through it, and I see other very good and significant opportunities in Pacific Corp. In Berkshire Hathaway Energy.